Ron from Ronald Law, and in this quick video we're going to walk through a really important question, which is how to make money when interest rates are going up. You know, the analogy on this too is how to make money when interest rates are flat and when they're going down. But let's jump into this article because I think it really pounds a good point about the yields compared to interest rate. So this is an article on BizNow, and it's basically talking about how inflation and interest rates have gone up and the history of buying real estate. So if the interest rates are higher than the yields on property, only cash buyers can purchase the properties, right? Because if you have negative yield, you have a very short window of cash reserves that you can make this property work. However, it talks about the way to make money is to not look at the current production, but actually look at raising rents. And I think it's here, debt finance guys that don't get to compete, that's normal. But really when the returns are very low, you have to look at growth rate. And what that means is, again, rent has to go up to exceed what your debt is on the property. So you're underwriting for rent increases, which is fine. I think there's a commercial market that is prepared for this. Multifamily is going to do well. But also for traditional investors, if you still want to buy, if you still want to give liquidity to triple net and other types of property, you're going to have escalators. You're going to have this inflection point where maybe returns are negative, but then they're projected to come up very quickly and then keep exceeding. And when you mark to market, that's how long you have to hold the property. So for example, I'm buying a triple net with 3 years left on the lease. I have to have enough modeling that the next year my rental increases will make me cash flow neutral. The year after that, I'll be cash flow positive. And then my projection is I got to hold it for at least 3 years to mark to market, put a new tenant in there and raise the rents. So it becomes a very, I would say, longer term outlook. You're not going to be able to just jump into a triple net property, do nothing to the property, and then sell it in a year and a half for huge gains. That's cap rate compression, that's debt costs going down. It's a very different environment. And I think if you learn it, you're going to be able to make money in any environment. So smash that like button and subscribe for more commercial real estate content from Ronald Law.